everyone. I am Vrishti Gada, an ESG consultant at Lodha & Co. Welcome all
उसी के लिए
to
बोल रहा हूँ।
मैं नहीं डालता, क्यों डालना है?
participants are requested to be on mute all the time during the session.
ऐसा होता है।
We welcome all to our 10th webinar on ESG. We have been formally conducting webinars on topics such as materiality matters, human rights risk assessment, stakeholder engagement, etc. This webinar is in collaboration with UpDAP. The topic for today's webinar is From Data to Action, Integration of Automation to Drive ESG Initiatives. The aim is to understand how effective data management plays a crucial role in ESG, contributing to credibility, transparency, and effectiveness of organization sustainability initiatives. The purpose of this webinar is purely educational, and any kind of compliance-related decisions are referred to a professional advisor. We have a question and round session at the end of this webinar. In case there are any questions during the session, participants are requested to put their questions in the chat box, or at the end of the session, they can unmute themselves. We will be happy to address the questions. Participants are also requested to be on mute all the time during the session. Now I would like to introduce the organizers of the webinar. So Lodha & Company is a 80-year-old firm into audit and assurance, ranked amongst top 5 audit and assurance providers after the Big Four consultants, having spread across 6 states in the country with an international affiliation with UHY. Introducing our tech partner, UpDAPT. UpDAPT is an ESG tech company providing SaaS solution to enterprises and funds across sizes and geographies to digitally track, monitor, and report unstructured and large data sets, ESG data sets, in alignment with domestic and global sustainability standards. I would also like to introduce the speakers of the webinar, Mr. Pradeep Malu, partner at Lodha & Company, and also heads ESG advisory along with accounting and management services. Mr. Satish Ramchandani, co-founder and chief business officer of UpDAPT, and Mr. Satvik Rai, who is a product head at UpDAPT. Now, I would like to pass on the virtual floor to Mr. Pradeep Malu and begin with the session. Thank you.
Thanks, Simone, and very warm welcome to all of you, to all the participants, and good afternoon, good evening, and good morning, wherever you are from, for this wonderful webinar. It's going to be a very interesting session today because what we're going to talk about, the most challenging part in ESG reporting about the data and data management. How do we make our reports more effective, and how it outserves the purpose for which it has been, created. So I think before we start and get into, like you all, I'm also excited to hear Satish and Satvik, who are colleagues on this panel. I will just set the context of how we are going forward, and about the ESG reporting, and then the data criticalness, as how the data plays a vital role in terms of the right reporting. So to begin with, again, as a thing, like, let's call ESG, which is not a new phrase or terminology for I'm sure for all the participants here. Environmental, social, and governance. E section covers like everything with respect to climate change, to water, to GHG emissions, the carbon emissions, mineral resources management, and so on. So anything and everything to do with environment part is covered part of E. Social covers like human capital, society, the community where these businesses are operating, and everything which is connected with society and the people, which is called social part. And G, basically the governance, which talks about the ethics and the standards the company or the business enterprise follow while conducting their businesses. And therefore, how transparent they are, how clear they are in their approach, and the commitment for several society or the environment thing. So in fact, the few of the people always say that if it is good governance in any enterprise or any company, then automatically environmental and social factors are taken care of. So that's very, I mean, that's a nice statement that if the governance is on the top of these two factors, things will happen automatically. So ESG is like in a nutshell, in an overview point. I just sort of just brushing it up from this perspective. So we can move on to the next slide, Rishti. So ESG would move on to ESG reporting. I think so, Rishti. So now ESG essentially is not a separate agenda for any business enterprise. Let us understand that. It is not like CSR, which is separate, where the community social responsibility is happening, where the companies earn profits from whatever the process they follow, irrespective of with regard to social or governance or environmental factors are concerned, but they spend some money on some portion of their profits on community development. So it is something different. ESG essentially is part of your business process or business strategy. It is not separable from what you have business strategy. You cannot have a business strategy without being, without considering ESG factor. So you have to inbuilt your strategies, so it could be like in terms of your business, product or the process, which has to comply with emission requirements or the social requirements and so on and so forth. So therefore, it is important for all of us to understand that it is part of your business, a day-to-day business, integral part of the day-to-day business. And then whatever system you follow, ESG, of late in the last few years, the reporting of ESG commitment of every business enterprise is almost has become in few of the countries or few of the regions in the world. And it is becoming by and large mandatory in terms of reporting. Like every company is supposed to, every listed entity is supposed to publish their annual reports. So where ESG report is also published from that point of view. ESG is, we will talk about it, and also Satish and Satish will also cover the stakeholders and so on and so forth. So what I'm trying to put forward is that whatever commitment you have as a part of strategies and so on and so forth, from the ESG perspective, it is required to be reported. We move on to the next one. So why report is required? If you are, you are given a task, okay, you comply with environmental, your parameters or social parameters or governance standards, then it's okay. It should be fine with the companies, but they're supposed to be reporting that what they're doing. Why? So there are a couple of things which are important to quickly go through that. And first and the foremost is the regulatory requirement, where there are, like in India, there's a Securities and Exchange Board of India, SEBI, which has, under the Ministry of Corporate Affairs, they have been given mandate for implementing ESG portion or annual report or annual reporting, what is required for by the listed companies. So there's a regulatory requirement, and similar requirements are there with European country, with US companies and so on and so forth. Maybe they are calling different name. Sometimes they may call it a sustainability report, or sometimes, but at the end of the day, they are addressing these three fundamental issues about the environmental, social, and governance part of it. Similarly, if we talk about it, or let me just summarize all these 5 points, that reporting is mandatory or required component for a business enterprise, publicly traded largely, to meet the regulatory requirement, to have the business requirement. I will explain what the business requirement could be: to mitigate the risk, to enhance the value, and also to expand the business. Let me start with the last one, the business expansion. Like, for example, ESG and money or the investment are now connected by and large globally, where if you are ESG compliant candidate, then probably money would flow into your company. And if you are not, then there are flags in your for your companies, and maybe the money can fly back from your company. So that's very, very critical. And therefore, it is not only sustaining the existing business, but also for expansion purposes. If you are looking for, if the people are looking for, the business enterprise is looking for to raise more money from the investment for investors, then business expansion purposes, reporting is must, that what compliances you are doing. Similarly, like, it creates a lot of value because you are mitigating the risk in terms of the environmental risk or the social risk, or in totality, if we talk about it, the enterprise existential or sustainable risk. If you don't comply with these kind of parameters, probably the businesses or the enterprises are or would no more be sustainable for long term. So that's very, very important. Interesting portion will be, after the regulatory, which I explained to you, business requirements. Now, for example, if your company is part of, or your business is part of a supply chain of some international company or large company internationally, it is it may be the requirement coming in from them that how compliant you are with the climate risk. What are your carbon emissions or carbon footprint for each of your product? What are your, is that you have, a policy towards the forced labor or the child labor, or how do you pay them wages or minimum wages, or do you pay minimum wages to your workers or you don't? Or do you have a policy popularly known as, for example, DEI, diversity, equity, and inclusion, and so on and so forth. So all these parameters where these international companies or the large companies are out to evaluate their supply chain. And over a period of time, maybe next 3 to 5 years time, if you are right there, probably you will continue to be part of their supply chain. But if you miss out on these kind of points, probably they might give you some time, but eventually you might, in case you don't comply with, you would be dropped from the supply chain. So any of these parameters are very, very critical in terms of continuity of the business. That's very, very important. And therefore, the reporting of what you're doing from the ESG parameters, or from the ESG activities point of view, it's important. We can move on to the next one, Vrishti. So reporting, very quickly, I would say there are three. There are so many frameworks. Different countries have different frameworks are there, but I'm just putting three for the sake of which are largely example. Like for Indian context, the SEBI, the Securities and Exchange Board, has come out with business responsibility and sustainability report, popularly known as BRSR. That's the one which is every listed company is required, wherever there the mandatory requirement for, ESG reporting, they are supposed to report in BRSR form, at least provide, in case they adopt any other form, any other framework, then the information which needed as per BRSR must be covered. For example, if the company has GRI as a framework, or integrated reporting as a framework, they should have covered the requirement or the information what is required as per BRSR. So these are a few examples. I'm not getting into more details because we already had a webinar on this earlier, and then the whole idea today is about how to work with data, and that's very, very important for ESG reporting. So we can just a broad touch base on these kind of things. Any next one, Vrishti, we have? But while making a report, there are a few challenges, and the challenges I've tried to list here. A few of the challenges, I'll just pick up a few, and then we talk about we would need more time to spend in terms of how the data and data management tool works. So I'll just pick up a few of these. For example, assurance. Assurance is one big challenge as of today, because there is no evolved system as of today in terms of collecting and managing data with respect to ESG. So that's a big challenge right now in terms of reporting as well. So the second would be like in terms of multi-locations, multi-industry, multi-product companies which are there. And then there for them, it is also a very big challenge in terms of collecting the data and then putting them together as a company as a whole, on in their report, ESG annual report. So that's another important factor. Another could be like, for example, the companies need to have to understand the carbon footprint for various products or various the product processes. So maybe LCA, life cycle assessment requirement, which is not so prevalent right now, the practice in terms of with the with this reporting. Another factor which could be that like the BRSR is the one which is provided. You have the BRSR is based on certain 9 principles of NGRBC and so on and so forth. So it is missing out on the materiality idea, whether the particular principle is applicable to your company or not. So these are a few challenges which are there in terms of ESG reporting. So the idea is how one should overcome to these challenges. We can move on to the next one. So essentially, the ESG reporting is based on the data, which is the data which are generated on day-to-day basis, on minute-on-minute basis across the business enterprise. I mean, at different level, different type of data. And the idea is that while reporting, to under this ESG category, it is important to capture all sorts of data whichever are generated. And of course, the exercise become much complex when the reporting requirement goes beyond your business enterprise, when the requirement is for capturing the data of third party or your supply chain and so on and so forth. So it becomes much difficult. So that's a very like what we popularly say that if we have to manage the data, you have to measure if you want to manage. And if you cannot measure it, then it is very difficult to manage anything for that matter. Now, if you have a requirement with respect to the water consumption or with respect to GHG emissions, the carbon footprint, or the employment, diversity, or anything for that matter, the most important point for all of us is to understand that where we stand, the data. First point is that whether we have a right process to collect the data and converting them into in a presentable form for the report. That would tell us is where exactly we are and where exactly we have to move forward. So the 3 factors which are important from the data perspective. So can we see the next one? What are these 3 factors for the data? The data has to be very authentic. If it is not an authentic data has to be very accurate. If it is not accurate data, I think if we miss out on these 2 counts, if it is not accurate, if it is not authentic, then whatever report comes out, it will be like what popularly, the saying is GIGO, garbage in, garbage out kind of scenario. And you cannot have an estimate for that matter. Now, I give you simple analogy, like how you do for your financial transaction recording. Now, if that level, there are certain accounting principles, there are certain accounting tools, and you manage everything with all kinds of debits and credits. And at the end of the year, you draw a profit and loss or income and expenditure account, or balance sheet and cash flows, statements, and everything for that matter. Now, when it comes to non-financial reporting, like on climate or a social or governance aspect under ESG or sustainability head, it is equally important that the same amount of work or same amount of accuracy or authenticity is needed like what is required for reporting financial data. That's very, very important. So in case if we miss out on these two aspects, we cannot put forward the data. And obviously, then sometimes this year we follow a particular pattern, the next year something else. They become non-comparable. And if these and the data becomes non-comparable, then it is very, very difficult to what do you call to see what is the trend happening inside the enterprise. So it is important to have these factors, these three factors for the data management system. Like the data should be very authentic, the data should be very accurate, and the data, whatever is presented from the reporting point of view, it becomes comparable. So that these three factors are critical. Of course, there are a few more, but then these are the three critical factors which we talk about it, where which will help in terms of creating a very effective and correct report. Otherwise, what we call it popularly in this space is called greenwashing. If the report is produced without any authentic or accurate data, then it becomes more of like a greenwashing, and which is not a right thing. Which is the enterprise will have a huge risk. I mean, a reputation risk, plus otherwise there are so many other risks in terms of even businesses as well. So I think one should be very, very clear what kind of data system we have in terms of getting it. So we can move to the next one. So in this BRSR, when we again coming back to this now, how the data is critical. So BRSR, there are in three sections, A, B, and C. In the C section, there is a lot of reporting happens there on 9 principles as recommended by MCA under NGRBC and national guidelines. These are for sustainable businesses. So then these if we talk about these 9 principles, each principle has essential indicators and leadership indicators. Essential indicators are those which are mandatory for reporting, and leadership indicators are those which are not mandatory, but the companies and the enterprises are encouraged to report on leadership indicators as well. But just to give you there are almost over 100 data points, almost close to about 107 or 108 data points between these two essential indicators and leadership indicators, where you have to constantly, regularly collect data in a business enterprise for ESG reporting. Now, these 100, 110, 100 plus data points, one has to really manage those data points. As I said earlier, in terms of authentic and accurate data has to flow into the system, which will create the report. So that's very, very important for for any system which is followed by the company, where they touch all these data points. Of course, there are other thing, when it is from this year onwards, 150 companies and going maybe next 4 years, all 1,000 companies are subject to assurance. Now, if you're talking about assurance, then you want third independent person has to certify your data in ESG report. Now, if it has to happen, then obviously, for example, you put that in your energy consumption, you have so many joules, so many million joules consumption of energy. Now, it has to have a verifiable track record or trail in case somebody has to give assurance that the data which is given, or maybe, for example, the fuel consumption you talk about, or water consumption you talk about, or emissions you talk about. Every single point, every single data point has to have a track or the trail behind it. It becomes assurable. If there is no proper data, then the assurance is in my opinion, will be impossible. Rather, it'll be very fractured opinion somebody is giving you in terms of assurance that, okay, there is no data available, but as per the company, we just check this way, that way, and then this is how it is. So therefore, it is important for the companies to have a proper trail with respect to how the data, right from the source, that from where the data is originating and how it is traveling right up to the report. and so the whole process and different type of controls are required to be built in, so that data are not touched or manipulated or fudged by any person in between. So that's the very important for all of us to understand. So these are the few things about the tracking or the trail building or assurance part, or for all these 60 such 100 such data points, which is very, very important. And it's a huge thing. I mean, unlike financial reporting. So I think that's a very, very effective data management tool is definitely needed for that purpose. You can move on to the next one. So, so data management tool. So the whole idea of this webinar is to know more from our tech associate or tech partners to see how they have an excellent product, which we all will be seeing, some sort of a demo of that. Of course, the time is going to be very short, limited time. So whatever best possible, Satish and Satvik is going to talk about this. So let's hear them out. I'll stop here and I will hand over to Satish to take this forward from his perspective. Satish, over to you.
Thanks, Pradeep, and hi, everyone. I think before I speak a couple of things, and not majorly because we've covered a lot, Pradeep, and Satvik will cover quite a few slides. And maybe before I add a line or two, I would like to play a quick video introducing people about that. Yeah, Veena, if you can play the video, please. Is the audio available for everyone? Because it is not for me.
It's not available, Satish.
I think Veena, the audio is audio is not available. You think can you reach it?
Can't hear audio.
Just a minute, I'm just...
Sorry.
I guess that's the mirror that she's facing.
Let's wait for 30 seconds. No, we can't. Okay, I think Veena, we are not able to hear the audio, so we'll. Yeah, we can hear you now. Go ahead.
Climate change is one of ESG is changing the business world as stakeholders expect companies to make their operations more sustainable. Climate change is one of the biggest risks that businesses are facing across the globe. Over 90% of the global economy falls under a net zero pledge. Regulators are having enhanced ESG oversight with mandatory disclosures. Investors, lenders, and insurers are sensitizing climate risks in their portfolios and demanding ESG reporting. Rating agencies, supply chain partners too are feeling the pressure. Inaction on addressing ESG issues has the potential to adversely impact the balance sheet performance and reputation of companies. Is your business ESG ready? No matter the size of your company or industry it belongs, integrating ESG factors into business decision-making is imperative. How do you set and achieve your ESG and net zero goals? Do you know where your business stands in its sustainability journey? Have you set targets and methods to monitor them? Do you have complete and accurate ESG data across operations and supply chain? Do you report sustainability performance? Updapt has all the answers to simplify your sustainability journey. An ESG tech company, Updapt is a one-stop solution for all your sustainability needs with cutting-edge digital tools under its product suite. SaaS-based ESG products of Updapt comprises of solutions for GHG accounting, Scope 1, 2, 3, reporting aligned to global standards, including GLI, TCFD, SASB, BRSR, DJSI requirements, interactive dashboards with deep analytics and benchmarks, supply chain assessments, climate dashboard and carbon offsets, risk management, portfolio monitoring for funds and lenders. With a robust and agile tech architecture, solutions of UpDapt easily adapt to any business environment. Supported by global partners, our solutions are helping diverse clients to achieve their sustainability goals efficiently. UpDapt, an ESG tech company.
Sure. Thanks, Veena, and hi, everyone. I'll just take a couple of minutes because I would like to give 15 minutes to Satvik to run some slides and give a quick demo. In the last 10 minutes, maybe we can leave the floor for any questions. Obviously, we would like to give a detailed demo, to know more, to share more insights about what we have built for the market. And though Pradeep has covered the larger part of the context and, Satvik will cover some, but maybe just a couple of lines, from a market standpoint, right? Overall, if you look at globally, 30 countries are making ESG disclosures mandatory by 2050,
Satish, your
India
voice
by
is breaking.
2070, given, it's
Satish, your voice is fluctuating. We can't hear you now.
well, I'll try my best. Yeah, but that's okay. I mean, I'm in a zone maybe where there's less network. I'll not take much time any which ways. So yeah, as I was saying that, globally countries have committed to be net zero there, right? The only way to reach there obviously is quickly, and very efficient and effectively is through the role of, technologies that would play for businesses in their decarbonization journey. Not only from a reporting standpoint, but even, the role of IoT devices, the cloud and the big data and various other things, including various waste management and water management solutions, which are technologically very, very advanced. They are going to play a very important role, for businesses in their net zero goals, which they have set for themselves. So needless to say, as Pradeep said, data is going to be important because you got to know where you are, you got to measure and then look at it that how do you really enhance your performances. So I don't need to undermine the significance of the data. And as we know, the criticality of financial data, right? Similar is the criticality of the ESG data, not only from a regulatory reporting standpoint, but given its significance in the market because investors, rating agencies, and all these stakeholders are seeking these data points. So any underreporting or inaccurate reporting would mean that it will negatively impact your P&L. So yeah, that's not much from my side. I'll hand over to Satvik to run some slides.
Sure. Thank you, Satish. Thank you, Pradeep, for this introduction. What I'll do is, without any further ado, I'll quickly jump into the slideshow where I'll try to give you an overview about the role of tech in reporting and the net zero journey of businesses. At the same time, I'll also try to give you an overview of what we have built at UpDapt to solve the problems that companies and large corporations are facing, be it from a tracking, monitoring, or a reporting perspective. So do let me know once my screen is visible.
Yeah, we can see that, sir.
Yeah. So a broad list of items that I'll be covering in the next 10-15 minutes would include explaining the risk and opportunities that organizations face. What are the major shifts that are expected in the decarbonization journey as organizations across the globe, as well as in the Indian context, face this challenge of moving their operations to a more sustainable method, as well as what are the stakeholder demands, as well as the challenges that companies face while they go about the BRSR and ESG reporting. What are the mandates and what are the current regulatory frameworks that are governing the listed entities in India, and how, as a tech solution provider, can UpDapt solve this problem or basically enable companies to move towards a more greener economy. Primarily, to kind of categorize the risks and opportunities that organizations face, extreme weather events and other risk-related events are kind of threatening the existence of a lot of organizations. The way the operations are run, the way businesses are handled will need to go through a massive reengineering process where they'll need to integrate the factors of ESG and sustainability. C-suits and boards are noticing an increasing interest from investors and other stakeholders. A survey has indicated that over $41 trillion is currently the asset under management when it comes to ESG dedicated funds, and this number is expected to go beyond 50 trillion by the end of 2025. So what is also very interesting to know that ESG is going to contribute to almost 1/3 of the total domestic assets under management in India by 2051. And needless to say, the next frontier of sustainability isn't just about doing the right thing. It's about being able to properly managing your risks and opportunities for a stronger, more resilient, and a more profitable business over the long term. The key risk to just classify and put it on a canvas of what organizations face would include physical risk, transitional risk, as well as a liability risk. So the most important risk that not just organizations, but even the humankind face with the advent of climate change is the various kinds of floods, hurricanes, droughts, wildfires, and the kind of effects that it can have on the operations of an organization. So it's going to be very critical that organizations scale up, they bring in processes, the government as well as the ecosystem all step up to this challenge that everybody currently face. It's also been said that over 35% of the world's largest companies will have at least one asset at a high financial risk due to the physical exposure by 2050. So that is something that I think is pretty alarming and something which organizations will definitely have to think about, because when you're having an asset which is going to be at a physical risk due to these events, it's definitely something that you'll have to start working towards, as it's not something that can be done overnight. We have transitional risk, which is the second most important type of risk that organizations face, where you have different kinds of, the risk coming out or emanating from the introduction of policy, from various kinds of regulations that can come up, the kind of technological advancement that is happening. So the risks that are coming through these kinds of aspects are something which we categorize as transitional risk. And finally, the liability risk, which basically arises from the failure to mitigate or adapt to or comply with the regulatory expectations. So a very prominent company, PG&E, faces over $30 billion for their roles in various fire incidents, as well as the mishaps that have happened in the premises. A leading auto manufacturer has incurred over $33 billion in fines as the cars were recalled for falsifying the emission tests. So it's become kind of a mainstream event where a lot of companies are penalized or liabilities are kind of soaring up due to the non-compliance or say the regulatory gaps that they have kind of not complied with when it comes to the ESG context. Coming to the opportunities, while we definitely discussed about the risks that companies face, there's definitely a plethora of opportunities that companies can explore, right from being able to efficiently manage their costs, to explore new revenue opportunities, their alignment with the ESG investors' expectations and creation of value while maintaining and heightening the reputation. So these are definitely some of the areas where companies or new businesses can explore. So as companies move towards, or as I would say, the world is moving towards a more resilient, a more transparent, as well as a sustainable world, it's important that there's an ecosystem that creates and there's also, I would say, a value chain improvement that happens, which adheres to the principles that's been laid out, or at least the advocate or what advocates the ESG principles. The major shifts that we expect would definitely be a demand in products and services which are promoting lower emission-based products, or say technology that is definitely going to help companies in this decarbonization journey. What we also anticipate is a massive reallocation of the capital, where there's going to be a lot of, say, upfront costs that companies are going to incur in terms of implementing these technologies, in terms of implementing these processes, while having the benefit of having reduced operational costs over a period of time. We are definitely going to see a lot of new industries come up, or I would say a tectonic change in the kind of investments that happen in certain key industries, like say, be it mobility, power, and buildings, which approximate of about 75% of the total spending in net zero scenario. So you're going to have a lot of auto manufacturer coming up with electric vehicles. There's going to be a supporting ecosystem, right from battery to manufacturing components that are going to support those causes. You're going to have sectors like steel, cement, as well as the logistics sector coming up with innovative technologies and low carbon products. So in that sense, it's going to be a very major I would say, change that we're going to see over the next 15 to 20 years when it comes to companies upscaling and moving towards their decarbonization journey. The various stakeholder demands that needs to be expected, that needs to be, I would say, met when it comes to the ESG norms would include rating agencies, it could include the board, supply chain partners, investors, and lenders. As per a survey by KPMG, worldwide only 25% of the total companies are currently ready for their ESG audits. So basically, only, I mean, 3 out of 4 companies are not currently fully ready for an ESG based audit, which kind of rings a lot of bells in terms of identifying what are the current process gaps that companies face, what are the kind of capacity issues companies face, as well as the regulatory improvements that they need to do, either in terms of reporting their ESG data. So it's no longer going to be just a regulatory check when it comes to ESG. It's going to be including a multi-stakeholder engagement where a lot of parties that we're talking about, it could be your customers, your suppliers, your employees, your investor communities, as well as the auditors will all have to contribute and play their part. I think Satish had already previously mentioned that over 30 countries have made ESG disclosures mandatory. So in that sense, robust ESG performance and a practice will have a direct P&L as well as a balance sheet impact. Another very interesting insight was where a survey of 100 best companies to work, it generated 3.8 to 4% of higher stock returns as compared to their peers when it was compared on a 25-year horizon. So that also goes on to tell of how employees play a which major part in terms of determining success as well as generating higher financial returns. Most of the points have already been addressed. Just to give you a summary of it, you obviously have a great bit of ROI from following a robust ESG process, right from top line growth and protection to be able to efficiently reduce your cost across your operations, to be able to enhance your brand and reputation value, to be able to manage various regulatory interventions in order to incorporate and also have a very robust risk management framework. That is also one of the major benefits that having an ESG process in place would bring towards. It also ensures the upliftment as well as the enhancement of trust amongst your employees as well as supply chain partners. And it also helps you increase your value in front of your customers with you producing sustainable and more efficient products. So with that, you obviously know that there are going to be a lot of stakeholders who are going to be benefited by having a robust ESG process in place. Now, coming to the importance, or I would say the attributes of BRSR core, I wanted to specifically talk about this because with the new regulations that have been mandated by SEBI, it's going to be important that companies not just report the data of their own organization, but also certain attributes of their value chain partners, which includes topics around greenhouse gas, which includes topics around water footprint, energy, embracing circularity, enhancing employee well-being and safety, gender diversity in business, the inclusiveness in terms of their enabling inclusive development, fairness and engaging with customers and suppliers, as well as openness of business. So these are the broad topics that the organizations over and above the BRSR requirement, which asks for more than 100 indicators spread across essential as well as leadership indicators that a company would be expected to report on. Now, in terms of applicability, what we anticipate is what's been given out as a mandate is of the value chain partners, the top upstream and downstream value constituting to 75% of their overall purchase and sales. So as that many entities would have to report on their BRSR core elements. So the top 50 listed in 250 listed entities for the FY25 will need to report on these elements. For the current year, that is for the FY25, they will not require a limited assurance, but for the subsequent year, that is for FY26, even this requirement would be mandated. That is, you will not only have to report the performance of your value chain partners that constitute 75% of the value, but you'll also have to get these information audited and verified by a certified partner. So that is going to be, I would say, a path-breaking change in the way companies are going to report and monitor their data, and not just their data, as well as of their value chain partners. When it comes to the core assurance for the FY24, the top 1,000 listed entities, only 150 listed entities would have to mandatorily get that assured. When it comes to FY25, top 250 listed entities would be expected to report on as well as get the assurance done. You'll also need to report for the next 500 listed companies by FY26, and by FY27, the top 1,000 listed entities will have to report based on the BRSR core principles. So this is going to be a very staggered approach where companies will have to adopt and report on their BRSR indicators. So it's going to be very important that companies equip themselves and upskill themselves with all the necessary resources that they will need to ensure their BRSR reporting happens in a very seamless and in a meticulous manner. At the same time, what we also wanted to showcase is the problem statements of the various companies when it comes to the tracking, monitoring, and reporting of data. So when it comes to reporting of data, what is we have identified as a very major challenge is the real-time tracking of large set of ESG data. We have over 600 indicators which can be construed as an ESG data point. A complex GHG accounting process also makes it difficult for companies to grasp the vastness as well as the volume of ESG tracking. When it comes to, say, carbon footprint accounting, you'll need to account for data across your locations, across the assets, slicing through different functions and departments. Also, what's very important and very challenging as a task is the ever evolving ESG landscape. With the advent of newer frameworks, newer regulatory changes, and the kind of shift that the ESG domain is going through as a whole, a lot of companies will have to adapt. There is a major disconnect between data and decisions, and also the increased stakeholder demand for ESG practices. While it's not just required from a regulatory standpoint, but also to multiple other stakeholders, it's going to be very important that companies identify these challenges and start working on solutions to fix these problems. Now, the most important part, that what's the role of tech in ESG reporting and net zero journey of businesses? We identify there are going to be multiple stakeholders, multiple players who are going to play a very critical role in terms of reaching or an organization or a country to reach a net zero scenario. In that case, you're going to have companies which produce electronic vehicles, the battery manufacturers, the storage equipment. That industry gain a lot of prominence. You're going to have a lot of service providers who promote circular economy and sustainable products play a very major role. It's going to be very important for solutions around carbon removal, capture, and storage. You're also going to have a lot of AI and ML driven ESG insight solution providers. And we also have companies which will be helping you track, monitor, and report their end-to-end ESG data points. Now, when to just specify about what a digital solution can do in terms of enabling a company to report their data and help in their decarbonization process, a few key components that would form part of ESG data tracking would include a calculation of scope 1, 2, and 3 emissions. It would include the data tracking at a site level, at a business, or at a product level. The ability to maybe consolidate individual dashboards and drive ESG performance. The option to be able to monitor your target and also drive the actual performance and compare that with the targets you've set up. The ability to generate sustainable reports aligned to various frameworks, and also the requirement to report your scope 3 emissions across your value chain partners. So these would be the broad components that would form part of a standard ESG data tracking, measurement, and a reporting solution. And in the next 5 minutes, what I'll try to do is quickly show you the demo of a solution and explain you the capabilities of what the solution is capable of. Do let me know once my screen is visible. Yeah. So at UpDAP, we have created a platform that hosts an array of modules and functions. We have a data management solution, which is a flagship product. It's used by over 80 plus of our customers across varying industries, across different business cases. We have dedicated modules around supplier assessment, where you'll be having the option to evaluate the performance of your value chain partners. We have a self-assessment tool that helps companies to even evaluate and obtain a gap analysis, as well as a UN SDG alignment-based report. We have an enterprise risk management module that helps companies to digitize their end-to-end risk management process as well as a risk register, and a very important net zero module that helps companies to set targets. It helps companies to monitor the progress of their actual data against those targets, as well as the ability to forecast the future emissions as well. So with all this, we try to create an ecosystem that basically helps companies and large corporations to effectively navigate through the challenges that our companies would face in their end-to-end sustainability journey. The solution would give you options to track, monitor, and report their data by capturing data from multiple sources, which includes a manual entry source, an Excel update source, as well as an integration-based source. The solution has an extensive configuration section where you'll be able to define locations. You'll have the option to group these based on geographical divisions, business sections, legal entities, or any complex hierarchy that a company might want to follow. The solution is linked with leading emission factor databases, be it the IPCC, DEFRA, EPA, where you can update your calorific values, emission factors, as well as define targets and limits to be able to monitor your data. The solution has a lot of intelligence where anomalies get detected and any inaccurate data gets eliminated. You have options to track data and configure data points around waste, the types of process involved, tag whether it's hazardous or non-hazardous, with the options to even calculate your scope 3 emissions in a very detailed manner. The solution also provides an extensive dashboard capability where you'll be able to slice and dice through the various data functions. You would have the option to, in fact, even calculate your emissions data at a location level, at a facility level, at a group level, at a geographic specific level. There'll be option to even compare the energy intensity by mass, by units, by volume, by revenue, individual dashboards for scope 3 emissions, for your water, your actual versus the targets that you might have set up against the different sets of trends that might have added up. Your headcount rate information, the hire and turnover data can also be tracked. Most importantly, you'll also have a very visible audit trail to be able to substantiate the claims that you've been making. You'll have options to have the data validated by various groups. You'll have options to even enable a specific set of parameters only for a specified set of users. Options to even visualize the trends on a month-on-month basis. Options to download and keep a very visible audit trail is available. Coming to the reports, we have an in-house BRSR report, a custom report, an ESG standard performance report, as well as a peer analysis report where we give you the insights in terms of how your organization is performing as compared to your peers. We also have deep analytics based on AI and ML-based technologies where you'll be able to predict your future emissions based on your past data, as well as parse the information of your peers from the publicly available sources. So in and all, the solution is pretty robust and comprehensive in giving you the complete offering that you might require to track your end-to-end ESG-based requirements. So this is a solution nutshell. I try to rush through with the time that we have. I know we are running short of time, but I'll try to keep the floor open for questions if anybody wants to understand anything about the solution or ESG space as a whole.
I have a question. Hello.
Yeah.
Yeah,
Please go ahead.
Though it's very intuitive that, the solution that you just took us through, just wanting to understand, the platform is what you provide to the clients, and they're supposed to input all the data into it, and then, generate the kind of dashboards and metrics. Where does the quality layer then sit in over there? Or is it the responsibility and accountability of the company who is entering the data to be owning it end to end, or do we provide any quality layer or quality
Yeah.
assurance kind of support?
Yeah, very good question, Rashmi. So basically, what we do is we provide tech solutions for companies to enable to track them and facilitate the entire data tracking process. And while we do that, what we've also done is we have consciously added multiple layers to ensure there are checks and balances. First thing is we have added multiple layers of approval to ensure that the data goes through scrutiny before it gets finally approved. We have options where you can update your documents, add any notes, as well as keep any visible proof whenever the audit process will happen. We also have a dedicated audit module where the independent assurance provider will be able to independently verify the numbers. And the way we've created the interface, it gives you a very visible, I would say, flow in terms of where we have put in the calorific values, the emission factors, and how the calculation has happened. So through these multiple layers of functionalities and features, we've tried to incorporate these elements where it becomes easier for you to trace back the data as well as uh, have accountability spread across. But at the same time, it's definitely also going to be the responsibility of the companies that they maintain a certain level of quality when they're mentioning or inputting some instance of information. So
Okay,
it would be a combination of both, as how I'll mention.
I see. And is the the underlying formulae that you have, for example, your various parameters who don't have a direct, for example, carbon intensity or weighted average carbon intensity, things like that. Would you make that formula also transparent to the clients, or is it something that they input it and then the processing happens at the back end and only the value is what the client can see?
So what we do is that we provide options for you to make the data entry. We also provide you the option to view the outputs of the data entry, and the configuration tab, which I was basically showing you during the demo, is something which will be available even to the admins of the companies who will be using the solution. So in that sense, it's going to be pretty transparent in terms of identifying of what's the input and what's the output. And especially in the context of emission or say energy intensity or water intensity, you will be able to enter the variables and determine the outputs based on that. So it kind of leaves out a very visible trail.
Okay, that's good. Thank
All
you.
right. Okay.
Yeah, this is Vijay. Like when we say value chain reporting from BRSR, is there any methodology that they say, or it is an average based, or it can be a purchase element based methodology? Like we can go for average, or it should be an element wise methodology?
Yeah, at this point in time, to be very honest, Vijay, there is very limited information that is available or that's been provided by the SEBI in terms of the approach that you can take while reporting. But I would say the best approach would be where you mention the data to the most accurate way possible and provide disclosures about the approach that you have considered. Since this is something which will be applicable from FY25 onwards, we are still waiting for the updates from these various regulatory bodies on the accurate method that needs to be adopted. For all practical purposes, until we have those kinds of information available, I would suggest we use the information that's available as of now and then disclose the methodology and assumptions that has been considered.
Yeah, thank you.
All right, so thank you all for your time. I think it was a really great session, and as you can see, the coordinates been put out. Please reach out or send out any information that you have or any doubts that you have to the coordinates that are available, and we'll definitely try to connect and address those queries through that. Yeah.
Yeah.
Thank you everyone for joining us today. Thank you, Mr. Pradeep, Mr. Satish, and Mr. Satvik for the knowledge sharing. In case of any queries, kindly write to us at esg@lodaco.com. We look forward to your participation for all our upcoming webinars in the future. Thank you so much.